All right, so we opened up higher, we sold off, went negative, but now we're higher again. So this is a bear market rally. I took off a couple positions today. Home Depot, you're looking at here the put vertical spread that I put on, and I took it off. Okay, so you see here we took half off yesterday. I took the remaining half off today. So we ended up, so we sold the puts, the July 15th, 295 strike for 14.29, and we bought the puts. That's a 300. That's a July 15th 300 strike price for 16.35, and I ended up closing it out today for about a 32, call it a 32% return. Okay, so this is PPG. I went long puts. Stock was down earlier. It's coming back now, kind of back to flat. Actually, it's down 1.4%. So but it's come back a long way from its lows. So with PPG, I took half off. So I had bought the June 17th puts, $120 strike price. I bought them for $5. I sold half the position today for $6.80. Represents about a 72% return, and we'll see what happens with the other half. Okay, we're looking at CIT Group. I put this this vertical spread on, thinking it was going to come down. It is having an off day today. It's down about around 6% as we speak, which is good. Works for us. I closed out. So I originally sold the June 17th puts, 47.50 strike for $1.86, and I bought the June 17th puts, $50 strike, $2.87. I closed them out today. I made about 26% return on this trade, and I'm waiting to see if there's maybe another leg down for this. So I closed out my my put vertical on ODFL. This is Old Dominion. You can see the stock is down about 2% today. I pulled the ripcord only because I think I'm looking at the action here. We probably could see some strength over the next couple of days. So I'm weaning out on this position. So we closed out. So we sold the June 17th puts, 270 strike price for $9.80, and we bought the June 17th puts, $280 strike price for $13.40. I closed them out today. We made about 60%, call it 59% on the trade. On the previous trade that we closed out earlier, it was about 30%, so call it somewhere in between. Probably made like 40-ish, 40%-ish on the trade. All right, I'm going back here to ePain. So I traded this once before, not with great success because they had the strong earnings, but I'm going to come back because I think I could beat this thing. So I got the bear put vertical on this. You can see what I did here. I want this thing to trade below. This is the 315.40 mark, and we're right there. And the stock is up 1%. Market is up more than that. Okay, so you can see I had sold the puts July 15th, 310 strike price for $34.70, and I bought the July 15th puts for $320 strike price. I bought them for $39. So here we are. We're actually up 10% in the trade. I did it this morning when it gapped up, and I think that this thing is going to come lower. All right, I put a bear put vertical on CarMax, KMX. I believe that this company was a lot lower this morning. It's coming back a little bit, but I believe that this company is going to be trading below this this 93.85 price on it before expiration. So let's take a look at what we did. Okay, so I sold to open the July 15th puts. That's a 92.50 strike price for $7.65, and I bought to open the puts, the July 15th. These are the $95 strike price for $8.85, and you can see that's where we're trying to catch our spread. We're actually up in the trade about 4% right now, so that's fine. But again, I did it this morning when everything gapped up. It came down, and now it seems like we're rising again, so let's see how this turns out. Okay, so Bank of New York Mellon, BK, I did 2 trades today. The first was the bear put vertical. So you can see I need this stock to trade on or below the 43.52 level, which it is. It's actually down a little bit today. So let's take a look at what we did. Okay, so for the bear vertical spread, I went ahead and I sold the June 24 puts, $43 strike price for $2, and I bought the June 24 $44 strike price puts for $2.48. And you can see here we're up about 10% of the trade. So I'm anticipating that this thing is going to go lower over the next couple of weeks. Another trade I did with BK. So I did a bear call spread. So I'm anticipating by next Friday the stock will not trade above 45.23, which is right around here. So let's take a look at what we did. So at the bear call spread, I went ahead and I bought the May 20th, which is next Friday expiration. I bought the 45 strike calls for 53. I'm sorry. I sold the May 20 45 strike 50 for 53, and I bought the May 20 46 strike for 30 cents. So that spread there is where we're going to be if it were to close below this level that we're anticipating. All right, so I'm going back to the well with JP Morgan. I made money with it before. I'm doing it again. I'm trying to do it again. So here we are. I put the bear put vertical on this, so you can see that I'm anticipating the stock is going to close below this 118.17 range before expiration. You can see the stock is down now 2%, while the market is up about. So the S&P is up about 0.8%, but the Nasdaq is up 2%. So this thing is really an underperformer today. I'm anticipating it's gonna drop down and make some money. So let's take a look at what we did. Okay, so for the vertical, I went ahead and I sold the July 15th puts, $115 strike price for $4.85, and I went ahead and I bought the July 15th puts, $120 strike price for $6.68. And here we are looking to collect our spread. I'm actually up 20% in the trade already because the stock is really acting not great today. But let's see where it goes. I'm up 20, 21. You can see it fluctuating. So we'll see where it goes. I also did another JPM trade. Here I did a bear call spread. So I'm anticipating that so next Friday, which is the 20th, right? Yeah, May 20th. I'm anticipating the stock is going to close below this 127.24 range. So as long as it stays in the green before next Friday, we'll be able to collect our premium. Let's take a look at what we did. All right, so this is where we're at. So I went ahead and I sold the May 20 calls. That's $127 strike price for $1.02. And I bought the May 20 calls, 128 strike price for 78 cents. So that spread that we collect is going to be ours to keep should the stock trade below this line here. If it stays in the green by next Friday, which I think it would, I feel pretty good about this. It's about a 76.4% probability on this trade. All right, so ctlt is the ticker. This stock, you can see, has been in a downtrend. It's been riding its 20, came up here, broke above its 50, but broke down pretty miserably. And now here we are in good volume, but now it's breaking down again today. The stock is up 1% today, but I'm anticipating that this thing is going to continue to trend lower. So I did a bear put vertical here. I'm anticipating on or before strike price that this thing is to be trading closer to the 88.30 level. So let's take a look at what we did. So I went ahead and I sold July 15th $85 puts, strike price, $85 strike price puts for $3.60, and I bought the July 15th puts, $90 strike price for $5.30. So you can see here's my position. I'm up about 11% in the trade. Again, I did it this morning when it gapped up, but it's coming in. I do think it's going to come lower. It's in a major downtrend, so I feel good about the trade. All right, so this is PKI. I put a bear put vertical on this. I'm anticipating, although it's having a pretty good day today, it's up 2.2%, way off its lows. But I'm anticipating that this thing is going to close below on or before expiration about 142.95. So that's the level there. It's been a downtrend, so it's been riding its moving average down, really collapsed. I just think this weakness is gonna continue. So here's what we did. We sold the June 17th puts, $140 strike price for $6.50, and I went ahead and I bought the June 17th puts, $145 strike price for $8.55. So you can see we're down a little. We're down about 14% in the trade because the market it has come off its lows, but I'm anticipating that this downtrend is going to continue. All right, so I did a bear put vertical on Simon Property SPG. This really worked out. So you can see this morning it gapped all the way up here. It broke its 20-day moving average, but since then it's sold off. So I'm anticipating that this thing is going to sell below. It's going to close below this 122.58 level prior to expiration. It's already down there. And again, I did this earlier. So let's take a look at where we are. So I went ahead and I sold the July 15th puts, 120 strike price for $7.83, and I bought the July 15th puts, $125 strike price for $10.25. And you can see here just the way the stock reacted. I'm already up like, call it 17% in the trade. I feel really good about this. I was this close to actually taking profits on it earlier, but I'm gonna let it play out and see what happens. So, part of my process here is I needed to increase my downward bias. You can see my portfolio is structured now with 60% upward bias, 27% downward, and 13% neutral. There's a little bit of a pop today in the market. This could follow through. This could last a couple of weeks. This could be a bear market rally. So I'm hoping to unwind some of these upward bias trades, maybe for a profit, and then continue to build my downward bias, because I don't think we've hit the bottom yet. It's my opinion. But again, I'm trying to keep this portfolio as neutral as possible. You can see I'm a little biased to the upside right now, but we'll work on it. All right, that's all I got. Thanks, guys.